All right. Let's get moving today. We got three new DAs that just dropped today. We got definitive agreements on AGC merging with Grab, a company from Singapore. That's something that I am highly interested in checking out first. Not sure if y'all have seen anything about this yet, but Singapore is one of the world's leading economies, and I can get a piece of whatever is going on in there. I have no idea what Grab looks like, or what kind of company it even is in the first place, but I'm going to check it out. Then we have two other ones we'll check out after that. We might go through some annual reports or quarterly reports, check out some public companies, and see where we can get a good deal today, because that's what this is all about, getting a good deal. We just want fair. Share this with the Discord community. Alright, just sent that there. We'll post that in here. And then we're going to get cruising on with our Spac on. Alright, let's get after it. Alright, so we're going to look for press. We're going to look for the investor presentation on Grab. I'm not exactly sure what Grab is, but they're in Singapore, and I'd love to touch on Singapore. We got a great economy over there. Get in here. Welcome, welcome. Hope y'all are having a good morning so far. Gonna be a fun day. Always a great day for a Spac hunt. I'm trying to start with grab, but I gotta find their investor presentation first. Let's see. This is good to see. Lived in Asia for a few years. To say grab is everywhere is an understatement. Biggest bargain I've seen in a long time and gone big. Forget the valuation. It'll be tripled at no time. Imagine Uber on steroids. That Uber on steroids on steroids. Then that Uber on steroids. Then multiply that by 10. Wow. Okay. Let's see. Where the hell is this investor presentation? Okay, where is the investor presentation though? Why do they hide this from us? Investor presentations are not available. Hmm. Alright, while I go look for this, why don't y'all let me know how you're doing today? If you're making some money today, give me some ones up in the chat. If the market's neither red nor green for you, we gotta send this puppy north. Give me some twos up in the chat. And if this market has started red for you this morning, give me some threes in the chat so we can get the feng shui right and send this puppy north at the end of the stream. I'm gonna start us off, because your boy is making some money today. Well, this is not helpful. Hmm, interesting. I'm not seeing anything on grab. So we're gonna have to move on to another one until they have an investor presentation, which is a bummer because apparently Grab is a great company. I'd love to see what's going on with them. That's disappointing. Well, I'll keep my eyes out for them. Let's see what else we can dive into today. There's 2 more DAs that just got dropped this morning. Definitive agreements on, it looks like they're both either pharmaceutical or therapeutic companies. Right. There we go. Lumira DX. Okay, where's our investor presentation? Boom. If y'all haven't already, please smash that like button, smash that subscribe button, and ring the little bell so that you get notified every time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. Alright, what's the ticker? CAHC, okay. Bring this over here so you guys don't have to watch me work on a spreadsheet. Pretty boring stuff. Alright, let's go to specs. Okay, so this is CAHC. We are merging with Lumira DX. Get the most up-to-date price with our market cap. 10.06, okay. Current as of 4/7/2021. 10.06. What did they close at yesterday? Pre-merger 970. So we've already seen some price movement on it. And what's the market cap we're seeing at this price? $21.30. This is for Lumira DX. What do they do? Community-based healthcare. Interesting. Interesting. Trying to get like a summary of what this company does. Looks like at-home testing, but I want something better than that. Alright, we're going to do point of contact medical lab test. Okay, now let's go find the terms of our deal. Are we getting a good deal? It sounds really cool. It looks really cool. I don't even know what they do or if it does what it needs to do. I don't know what kind of revenue we're looking at, what kind of projections we're looking at. Let's go find out the terms. Got a lot of great companies that are getting definitive agreements right now to go public through Spac that aren't necessarily giving us a good deal. And that's the point of this, right? We want to make sure we're getting a good deal on whatever we buy because we don't want to buy shit for the sake of buying shit. Oh, wow. They're keeping 97.1% of the company. Holy shit. Are you serious? Alright, let's see what this does for us. Enterprise value down here. We're looking at $5 billion enterprise value. And then how about our equity value? Right here. Unless it specifies elsewhere. No. 5148 is our equity value. Okay. And we're getting 2.2%, and our sponsors/founders are getting 0.6%. Wow, no, not 60%. You heard me right. 0.60. It gives us a, wow, that's not, it can't be right. 2.2. Let's see. So they're giving them 115 million for this much. Interesting. Alright. Yeah, because it was a post-merger. Yeah, post-merger adjusted market cap of $4.3 billion, which was way below, the equity value, which we're always looking at, and it gives us it even below the enterprise value. So there's an opportunity. If you like the company, you're going to get a good deal on it right now. Let's go see what we're looking at finance-wise. Revenue. We want the revenue. Okay, key metrics snapshot. I want to see what our revenue is, though. They should have a financial page. Okay, so they don't really give us any projections at all. Well, that's not good either. They did $139 million in revenue in 2020. 112 million of that came from the last 3 months of 2020, so Q4. And of that 139 million that they did for the full year, they lost 200 and almost 41 million dollars on that. So not great if you are genuinely interested in being a shareholder here. Very unprofitable. Oh no, I'm kind of over this company already. I can't see any projections on it. Their revenue is not clear enough. They lower the price per test, that's great. But they don't give us any projections. Now, what do y'all think? You like it? Go with sales and channel partnership, okay. Bill and Melinda Gates Foundation, okay. Alright. I'm gonna go put some information in there so we can move on, because I don't know, there's not much I can do here. 139 million. So we did in 2020. Projected to grow to, that's a pretty wide range, $400 million range, 600 million though, we'll do. And that is for 2021. It's going to give us a compound annual growth rate of, drum roll please, starting at 139, going to 600. Doing it in 1 year. Not too conservative. 331.65 compound annual growth rate. That's from 2020 to 2021. TAM. Number of country, okay. So we're going to call it 76 million is our TAM. I think. Oh, it's 88. $12.3, 24.3, 34, 53.3. It's more than 76. What? 24.3, 34.3, 53.3. Oh, that's 76 in here. Got it, never mind. 12, 31. Brain's working slow today. Um, 75.9. Okay. 87.9, 88.2 billion is what we're gonna do. Hey, what is going on, Joe? How you doing, brother? What's open at today? What's it doing? Is it behaving itself? Oops. I saw it finished up yesterday. Ooh, down 80 cents. Time to add more. See how Muds is doing today. Oh, we're down. No. It's alright. Gotta wait for the card collecting community to find out about it. Talked to a few of my friends and they had no idea yesterday. They like the stock market too. Oh, bad open. It's alright. We'll bounce back. Chive on. Let's see. What else do we want to know? Oh, competitors. I have no idea what the competitors are, but they did have partnerships, which I like to see. Global sales and channel partnership strategy. Let's see. Retail, pharmacies, and clinics. EV stocks are down big. Yeah, that's yeah, I know the sector just started to rebound yesterday. I'm pretty sure is what I heard. I'm not in any EV plays right now, um, just because there's so many players out there and they don't really have many unique things about them. I don't. I mean, which companies are you in, Joe? We could talk over those. Which EV plays are you in? I should say before I give my full blown take on it. These in here. So we got United Kingdom healthcare system. Italy healthcare system. Oops. Last but not least, we got the Global Health Foundations. An impressive one. We got the Bill and Melinda Gates Foundation. All right. Let's see. You're in Neo ENX King. So here's where I'm going to challenge you, Joe. This is a Peter Lynch philosophy, and I respect him, tremendously as far as what I guess my thought process before I invest in any company. Um, you got to know why you're invested in there, right? So a lot of people they invest in companies just because they think, in his words, this sucker's going up, but they really have no idea why they're invested in there in the first place, right? You might like the EV industry as a whole, But where I struggle with the EV industry, because I don't know it well enough, I don't know enough about cars, enough about the electric vehicle sector, to understand which companies really have the advantage, right? What makes them unique compared to all their peers, all their competitors, and why they're going to win. Because I don't want to bet on the second place guy. I want to bet on the winner. And so my question for you is, uh, why are you invested in Neo? Why are you invested in, was it EN? And then why are you invested in Xping? Or Xping, Ping, let's see. So you should be able, is this Xpeng, backed by Warren Buffett? Whoa, that's pretty impressive. That could be a reason for you, right? This guy's backing it. I like what he's backing. So why are you invested in these companies, Joe? Like I'm 5 years old. Okay. She say you believe in Neo with their battery swap technology and their cars are fucking sick. That's good enough reason for me, honestly. You know, it's the challenge with the EVs that I have is I don't really know what makes one EV company, unique compared to the rest of them. And you're going to see something very similar with Lucid. The people who are invested in Lucid, they think that same thing, right? Their battery tech is great and their cars are fucking sick. And I'm not saying they're wrong. I'm not saying you're wrong. It's just like you need some. For me to make an investment into any company, I want to buy ownership of the company, right? I got to know that this makes this company unique. Like this company, compared to their competitors, like their competitors can't touch them. They're blowing them away, and this is why, right? There you go. That's another reason. That's something I look for too. Is company if they have enough assets that they can cover all their debts and then they have all this money to play with. It's very hard. Well, one, people get into companies and they think, the time in the market philosophy, uh, it does prove true, but they have this false connotation that it can't go to zero. Like if you give it enough time, it will recover, and that is true for most companies. But for some companies, that's not the case, right? If the company has a lot of debt, well, worst case scenario is it might go below $10, it might go below $5, it might go below $2, and it might go to $0 because the company goes belly up. That's what happens when you have debt and you don't have enough assets to pay it off, and you can't restructure and you can't have offerings because no one wants to buy your stock anymore. The company exhausts all options and they file for bankruptcy. They're done. Um, so yeah, you always want to look for companies like you said that they can cover all their debt. They have no debt, in the best case scenario, and they've got a lot of money to play around with. Um, those are the companies that will be around after a market crash. Market crashes tomorrow. Last 10 years, those companies, they're running just fine. Your company is going to be worth more in 10 years than it will be today. You just got to find the companies that are going to be around for 10 years and they're going to grow. Their earnings are going in the right direction. Their earning, with inflation, their earnings should always go up. So you just need them to be around and you need them to grow for your money to grow with it. Let's see, China's backing them. I love everything that's government backed. If they're government backed and the government doesn't want them to fail, they're not going to fail. That is my thought process there. Let's see, they have a deal with Metro and with the biggest oil company in China. There you go. You explain. You're speaking the lingo. You know what I'm looking for. So you're explaining to a 5-year-old, well, one, their battery swap technology blows away their competitors. Their competitors can't do that. Their cars are awesome. They look awesome in general. Um, they can pay for all their debt, and they still have a ton of money to play around with for the sake of growing their business, scaling up and growing your money with it. Uh, the Chinese government is backing them, so it's going to be very difficult for them to fail, and they'll grow quick because of that as well. And then they also have a deal with they have strategic deals or strategic partnerships with Metro, the biggest oil company in China, that no other EVs have. That's why I think they're going to win out. Right? That's the 5-year-old explanation, or 10-year-old, whoever is old enough to comprehend that. But you did a great job there, Job. All right, I don't know much about this company or what else I can put for this company. I'm not really that impressed. Impressed with their tech. I'm not. I don't believe the company's worth what they say it is. So that's a Neo, or is that Xpeng, or whichever company the other one was? The one that's backed by Buffett, I like even more, just because if Buffett's backing it, if Buffett and Munger are backing it, like they have my thought process way more optimized than I do already. I get a lot of my philosophy from them. Where did this row go? There it is. Okay. So what are my notes? Notes. Hmm. Um, Enterprise value. I'll bring it over here so you guys can watch me summarize. Enterprise value and equity value seem a bit high to me for a company that is seemingly new and did. Let's see, let me get the calculator up too. Let's see their exact revenue, what they did. They did 112, okay. 112 to 74. Let's divide that by 139, 153. 80% of the revenue, okay. About 80% of 2020 revenue. Q4. Okay, seems aggressive. save that. Same with Open, down 30%, but you believe it's going to grow over 10 years. And okay, you're talking over Neo. Gotcha. Yeah, I think Open is going to grow tremendously over the next 5 to 10 years. Um, Next 5 years, you're really going to start to see, is this a company I want to hold long term? I mean, I'm going to make that same decision. I have no anticipation of selling it anytime soon. You know, my thoughts on Open, but yeah, that's where I'm going to kind of make up my mind. Probably 5 years from now, is it progressing the way I imagined it would? If yes, I'm going to hold until year 10. If it's not, I might consider, reevaluating my position. But I think they're, like, for a 5-year-old, right? Selling your house is a pain in the ass. Well, sorry, it's a pain in the butt if you're 5 years old, right? It takes a bunch of time, it costs you a bunch of money, and you have random people walking through your home all day, multiple days, hoping that they offer you what you're asking for. And you're hoping that that offer they give you is going to be all in cash. Otherwise, you got to wait longer for the offers. Um, you got to wait longer to get your money, sorry, which you don't want to do. What they do is they allow you to sell your home where it typically might take you, 3 months to a year to really, sell your home and get the price you're looking for. They allow you to sell your home in a day pretty much. You go on their platform, you put in your address and some information if you want them to know, like if you did any remodels or you added anything that they can't see from your address, and within 24 hours they're going to make you an offer. It's going to be in your inbox for you to either accept, decline, or counteroffer with. If you don't like what they offered you, you don't think it's fair, you can give them a different offer, your counter, that you think is fair. And then, you go back and forth. Eventually you accept the deal, and then you get to choose how quick you want to move out. You can move out in 14 days, you can move out in 90 days. It's up to you. Closing date. And once the deal closes, that money goes from the escrow service to you. The title from your home goes to them. They own your home now. You have all that money, 100% cash, in your bank account in 14 to 90 days, depending on how quick you want to move. And then you can use that same platform, and you can buy your next home on there from whoever else sold their home on Open Door, right? That's the 5-year explanation. It takes a typically and conventionally difficult, time-consuming process of selling your home, and it makes it easy. It makes it efficient. It makes it so that you don't have the headaches that you typically do that come with selling a home or buying a home. It makes it seamless. It makes it easy. It adds convenience in the age of convenience, and they're blowing away their competition right now. And their competition doesn't have the software to catch up to them right now. Even though they got more money, they don't have time on their sides. So there's Open Doors, 5-year-old explanation for me. Renew Power is even easier. Right? Renew Power, another one of my holdings. I don't know if you're an RMGB, Joe, but Renew Power, 5-year-old explanation. You got India. America's got 300 million people. India's got 1 billion people. And in the next 10 years, they're projected to grow exponentially as far as infrastructure, as far as business goes in their country. And in order for that to happen, they need a lot of energy. India does not have a lot of energy, so they need to buy it from people. What Renew Power does is they are a renewable energy company, so they create efficient energy for the people of India to power the existing operations and their growth operations that they're expected to go through, over the next 10 years. And currently, they are the #1 renewable energy company in India. They are making a lot of money, and they're going to continue making a lot more money because they are backed by Indian government contracts, because the Indian government wants them. So it's going to be very hard for them to fail. That's may have gotten a little bit complex for a 5-year-old towards the end, but that's the gist. They need energy. We give them energy more efficiently than their other energy sources in a way that's sustainable for their country's growth. That's why I own the company. Co-owner of 3 publicly traded companies as of now. Better Therapeutics. Oh yeah, for open, that's a great point. I didn't include that in my 5-year-old explanation, but yeah, they've got, that's my philosophy also that I got from starting, you know, my first company 5 years ago. I was just my co-founders last week, a couple of them. Um, and when we were raising money, like I said, we raised nearly $1 million when it was all said and done. Failed, but we raised about $1 million in funding. Um, the one cliche, uh, I guess, rebuttal that we'd always get is that we didn't have a strong team. They wanted A plus team with a C plus or a D plus idea, and we came to them with a great idea, and we came to them with an A plus idea, and we didn't even have a C plus team. We probably had at that time a D plus team, or maybe even like an F team, as far as experience and business acumen goes. Now, if we were to do the same thing today, we were talking like if we were to do it today, our founder, the co-founders of our company, are doing big things right now. We've all gone on to start either our own separate businesses and raise additional funding. I run my own company. One of our other co-founders runs his own company. I've got another one of our co-founders down in Florida who runs multiple companies. My buddies in California, they run multiple companies as well. They're involved heavily in the cannabis industry now, and they're crushing the game there. I have a ton of clients. Um, have a pretty good operation going for them, honestly. And then two of our other buddies in California, one of them works for Udemy, which is an incredible, startup. They're a professional startup. They're doing a lot. I can't disclose how much revenue they're doing, but they're doing a lot of money. Um, so Udemy is, you can find what they're doing publicly if you look it up. But Udemy is incredible. They're an online learning startup, and my boy, you know, my dude, my main man, Bomsey, he is crushing the game there. He is getting promoted. He's he's in their good graces for sure. He's a very very smart guy. And then one of our other co-founders, Cairo, he works at Intel and he manages their largest account there, um, which is a lot of money. So he's crushing the game right now as well. He's in Sacramento, Vamsi's in San Francisco, and our dude Slater is in San Luis Obispo. So now if we took that same team, we said we could go back and we could win the game. I think we'd have a much better chance of winning the game now than we did then for sure. But that's because we have 5 more years of business acumen, right? And experience beyond our belt. And that those 3 years starting that company was worth its weight in gold, even though we failed. Think about how much we learned in those 3 years. That's why, coming full circle now, the team is the most important aspect of what you're investing in, or one of the most important aspects. That's why I'm always looking for it. Who is driving our vessel forward? Who's driving our money ship? Is it going to actually hit its location on the moon? Or is this guy driving a ship for the first time, a rocket ship for the first time, and he's going to go completely awry and fly all over the place and not take us to the moon, right? So that's the way to think of it. So yeah, team is one of my favorite aspects of Open Door. Their team is incredible there. Um, between the actual core day-to-day team, between the growth strategy team and Keeter Boy, this has been his idea for the past 20 years. You're telling me, Peter Thiel's been talking about how he's been talking about this since 2003 with him. He just doesn't have the time on his hands, so we needed to find someone to be CEO and manage the company and run it in the day-to-day, and then he can help grow it. So for 20 years, one of the best growth minds in the world has been thinking about what he can do with this company being Open Door. Um, and yeah, that's one of the guys in the day-to-day. Shamath is a key investor there as well. He's one of the most brilliant growth minds in the world as well. Say what you will about Shamath. I mean, I'm going to brush it right off because Shamath he's been my boy since before he blew up. 2016 is when I got my first exposure to him. That is when I got into entrepreneurship, and he's someone I've admired since then. Taken his advice, followed along with him, and then he just started blowing up this past year. And these people now don't understand him. They think he's just like some snake oil salesman. I'm like, you guys are fucking morons. Do some actual research and then get back to me. So you got him on our team as well. Um, yeah, we got a really really strong team there, Joe. So I'm not worried at all. They've got decades of experience under their belt. and they know how to grow stuff, so they're going to make our money grow too. Let's see. I think it's really weird nobody's talking about open lately. I agree, but it's kind of like I like it. It gives me more time to get some more additional capital in, right, that I can then take and I can invest in open. I can invest in any of my other positions at cheap. The longer it goes without the the price moving, I'm confident in those companies. I want to buy as much of them as I possibly can. But the reality is I need more capital to come in so I can buy and continue adding my position. And in my best scenario, open doesn't run for another year or two. And I, can just load up on as much open door as possible. And then when it finally does run, my position is going to grow exponentially with it. It's going to have me. I have so much leverage in that position at that point that my returns are going to be very, very nice to see. Honestly, dude, I do not plan on even working. I'll be working. Don't get me wrong. I love the game of business, right? And what's up, JC? How you doing today? JC, if you haven't already, please, please, please smash that like button, smash that subscribe button, which I think you have. And if you haven't already, somehow ring the little bell next to it so you get notified every single time I drop a new video, every single time I go live. And we're making money up in here, which is every single day the stock market's open, JC. Um, I love the game of business, though. I'm working actively on getting better and better at it, and it's like once you figure out the whole process, it's pretty easy to repeat that process. Is what I found from people who are more successful than I am, that I kind of look up to. uh, you can repeat it pretty easily, and once you got the game down, you just play bigger, better, more complicated games, and you got capital to work with then. And when you got capital to work with, it's much easier to make your business, get it from the ground up and just kind of go into cruise control mode. Like, you got to be involved, obviously, but I'd love to, even when I'm retired, be either on multiple board of advisors for companies, get into venture capital where I do own, companies that are private that I think are the future. That's like what my retirement looks like to me. So I plan on being there by the time I'm 40, if not sooner. But I agree with you, Job. That's where we're headed. Just gotta keep finding more and more of those companies. You don't have to find a ton of companies. You can find two or three really great companies a decade, and you'll be set for life. You can start with $10,000, $5,000, whatever. You find two or three great companies in a decade, you're gonna do just fine. We'll just do that the next decade too. Do that the decade after that. And learn to identify those companies, because when the market does finally come tumbling down and everyone goes and rides and cries and hides under a rock because they just got burnt badly by the market, the big mean men on Wall Street, we're the ones who are headhunting out there. We smell blood in the water. We're going to go get great deals in the companies that we weren't getting good deals on before, and we're going to scoop up shares in there, and we're going to scoop up ownership and equity of these companies for pennies in the dollar when no one else wants to play the game. And then guess what? When they think the coast is clear, and they think that there's no more blood in the water, and They're not going to let what happened to them happen again in the stock market. And they start dumping their money back in the stock market. All those shares we bought for pennies on the dollar, what do you think happens to those as we get more and more buyer demand for them? Because we had the business acumen, we had the investing acumen to go hunt them when they were on sale. Our shares go through the roof in that case. Oh, gosh, why are we 1 for 3 today on finding investor presentations? This is trash. Alright, maybe we'll do Yahoo never has anything. This is the same article, copy and paste it over and over again. Yeah, I can do that right now, JC, because I can't find any information on Better Therapeutics, unfortunately. Yeah, aren't they LiDAR? Yeah. When did they start being traded publicly? Do they have any financial reports? Oops. They should have. What is this? They should have the financial filings. The annual report was filed in March 9th, so about a month ago. Let's see what they're doing. I could get this actually, make a duplicate just in case. If I can get this on their website, I'd rather do it there. They have cleaner PDFs typically. No problem at all. SEC filing details. $10K, here we go. Yeah, let's do it on theirs. Should be cleaner. There we go. Balance sheet. Assets. Total current assets. Cool. Total assets. Cool. Does not look that they're very liquid. Yep, they are not liquid. Okay. Total liabilities. Well, they have this one public, I think, last year. They should have a bunch of cash. Oh, this is Lowedaddy Acquisition Corp. Okay, that's different. See if we got revenue on there. Okay, so they don't have anything right now for the actual company. Yeah, this is for the Spac. Okay, maybe this is not the best one for us. Let's see. 8K maybe has it. No. It might be SOL. Alright, Joe, no problem at all, my friend. I will see you either when you're back. I'm gonna be on here for like another hour or so, and then I have to run today. I have a meeting at 1 o'clock my time. Just slide out really quick. Shed the sweatshirt. Whoa, it is hot in the war room. I'm back, I changed. They got nothing here for us to look at right now, JC. Unfortunately. Maybe this can help us. This might be what we want. Okay, here we go. Current assets, beautiful. Love it. Love it. Okay, now we're talking. $18 million, almost $19 million in revenue. We have our net income and net loss. Yes, we do. How does this taking money out? Alright, this will work. We won't have like as thorough of a report, but it'll still do the job. We'll have to keep monitoring them though. Are you invested in them, JC? What's our most up-to-date price? $9.97. Okay, so what is dropping since we even started this? It closed yesterday at $7.80. Whoa, it's up big today. 162, 6, $1.62 billion market cap right now. Well, let's go over to our reports. Is this the, nope, this is their 10K from this company that we don't need. We need this one. So we're looking right here. You can see our 2020 old pro forma before the merger went complete. This is what, these are the numbers we're being based off of, because this is what their account looks like now. They have 300 million in assets. So this is in 1,000, and we bought this morning speculatively as the chart setup looked great. Gotcha. Okay, let's take a look. Let's dive deep into this, shall we? Got 309,877 million. And right here, total assets. We're on a total assets previous year end. Well, that doesn't really matter for us. I guess we could. 43,041. We had an offering. How about our liabilities? Total liabilities down here. 31 million. They have not made adjustments yet. They started using the money yet. That's to be expected. And then how about our liabilities from there? So we've reduced it actually. 49. They probably used some of this offering to pay off some of their liabilities. All right, current assets. Total current assets, 288 million. Like I said, that is at their offering. They just went public. They haven't had time to use their liquid assets yet for the sake of growth. How about our total current liabilities right here? 18,126. $278, 865. And it was before the offering went complete. It was negative 6 million. Preferred, do we have any preferred? No, no. Class A, Class B, all good, all kosher. Alright, nothing there. Now let's scroll down, let's take a look at our revenues. This is what we need, not the pro forma combined. Total revenue, we're looking at 18,904. Oops, we don't want that there. This is for their 2020 annual report. We had 18,904. Previous year we did $0. 18,904. $0. Okay, and then our net income or our net loss from that is 106. Okay, not great. Not a great start. 106,780. Previous year was negative 2,703. Negative 2,703. 123. Okay, so our profit margins. Oh, it's sort of divided by 0. Okay. Put this report in here. There's going to be a lot of forward-looking thinking here for this investment, JC. That's what I can tell you from what I've seen so far. I can bring this over here and make my notes in a second. So we're looking at this, right? Let's bring it all the way back. Oh, let's get our total number of shares actually and show us. They're not going to be worth a whole lot, but we'll need to calculate this way. this stock price is very volatile, is what I'm seeing so far. Keeps going up, keeps going down. All right, we need our calculator. One, 6, 2, 0, 2, 3, oops, 4, 5, 6. Let's divide that by 997. So how many shares we've got outstanding. There we go. All right, so this will give us our metrics we need. And these metrics are going to be very, very difficult to really use, JC, just because it is so fresh. It's so new. You know, all the metrics we see here, like the ratios might look good, but they just got all this cash handed to them. So it's expected that their debt to asset ratio should be really low. It's expected that their current ratio should be very high. It's expected that their book to value or book value per share should be higher than it really was. Yeah, you can see it's $1.72. Even that's almost trading too high right now. But you can see how they've been running before this. This is, like I said, drastic increase, drastic decrease, which is nice. Debt to asset ratio is 0.1, makes it a very safe bet. As of right now, you should be looking for their next quarter, see what they've made, what their moves have been this quarter, and where those ratios end up, because they're going to start spending a bunch of money this quarter, and they're going to add a bunch of liabilities. This ratio is not going to be around 16 anymore. It should come back down to around like 2 or 3. So they're going to spend a bunch of this, almost $300 million, and add a bunch of current liabilities as well. Our stockholder equity I'd expect to fall because of that. They only did 18, almost 19 million in revenue for 2020. Relatively new company, that's expected. They only did, well, in that 19 million of revenue, they lost 106, almost 107 million. Previous year on $0 of revenue, they lost 2.7 million, almost a little under 3 million. So you can see their profit margin. They are highly unprofitable right now. I'm not going to hold them to some different standard. I don't do that for Luminar. I'm not looking at profitability right now with Luminar. I'm looking for Luminar. It's about their relationships, their partnerships that they have existing, their order book, their forward-looking order book. They got 1.6 billion in orders coming in the next 2 years, pretty much. So there's a lot of intrinsic value in there that the market hasn't realized yet, and they haven't been reflected on their earnings reports. So that's why I like Luminar. That's why I think Luminar is going to win out in this LiDAR game. Besides the team working on it, the investors behind it, their experience, their networks, the technology itself is phenomenal, and the partnerships is a big thing. Partnerships and contracts that they've already got signed. So, there's a lot of value there in that. Ouster, I have no idea. I haven't done a deep dive into them. Do you know of any partnerships they have, JC? No problem at all. Anything else we're going to look at, JC? I have no agenda the rest of the day. I struck out twice on 2 of my DAs for the day. They have no investor presentations, so there's nothing for us to go off of. I'd love to do some more earnings reports. If there's any other companies that you're invested in that are public, I might even just make a Jimmy John's order right now. Okay, so that's how loose my agenda is for the next 40 minutes. But I would love to. I would love to do earnings reports on any other companies that you're in right now. What are your other plays? In the meantime, I'm gonna start making a Jimmy John's order. Only way I'm gonna get lunch in time. Just imagining a random person joining my stream right now. This dude just ordered Jimmy John's. Yeah, I'm starving, dude. I can go just pick. It's literally across the street. I'll just pick it up. All right, what else? What else we got? Bought some canoe this morning. Have you already done GOEV? I think. No, I don't think I have actually. I think they're relatively new also, aren't they? Okay. They just dropped one a week ago. Very nice. Let's do this one. I'm going to blow this screen out here. Yeah, they're relatively new also, so our ratios aren't going to work too well on them. Let's see how revenue looks. Numbers are going to be, might not be worth it us doing this time right now. We want to wait for their first quarter of being public, JC. Just because these numbers, you can see they're going to all be very skewed, just like the last one. Looks like they just went public very recently, like through GOEV. They may have been founded, which is different. Yeah, founded, like they've been private since 2017. You can see here. They just went public through GOEV or whatever. Spac took them public. Yeah, very, very recently. And because of that, you can see on here the numbers are going to look very similar to our last one. 2019, total assets, $72 million. 2020, total assets have increased to $753 million. So it's going to look great on paper. Our liabilities have not adjusted correctly as well. So while we were insolvent before in end of 2019, 127 million, 128 mil, 72 mil over here. Our liabilities did increase a little bit to 181, but our assets have been infused with all this cash. You can see, like they're prepaid, while it's their cash and cash equivalents. You can see 702 million just got dumped into the company. So all the data is going to be skewed for us. It might be more useful for us to catch them on their first public earnings. What else are you in? What are some new play, or what are some existing public companies you're in, or maybe some SPACs that you're thinking about diving into that we can look at if we haven't already? Um, that would be good for us to do. Well, here's what I wanted to do. I'll do Berkshire Hathaway. Their earnings report's going to be so long. No worries at all, JC. This one should be interesting. I've been wanting to do this for a while, and I keep either being too busy or I keep forgetting to do it. But I love Warren Buffett and Crew annual. Warren, I watch and I listen to Warren Buffett and Charles Munger pretty much every single day. Those two, my boy Peter Lynch. Um, those are people who I look up to greatly. So I would love to check out their annual report, see how they're running their business. If I'm not, we were just down there. So look how clean their report is. If you want your numbers, you got your numbers. They're right here, Mike. Thanks, Warren. There we go. Okay. Let's pull this up over here. Let's go put in, this is Burke A, I believe. $396, $234. Okay. It closed yesterday at 395, 907.25. I'm glad you like it. Have you been using it? For the OTCs, I'm sorry about your pennies. My spreadsheet does not help with, or my site does not really appease to the OTC market, unfortunately. There's not a whole lot of functionality we can do like we can do with these, with SPACs and publicly traded companies. They have a lot of plugins like APIs, so I can update the prices automatically, but I can't get that same functionality for OTCs as of right now, unfortunately. Berkshire Hathaway, Inc. Class A. Yeah, please do. Like I said, it's there for y'all for free. And yeah, it's just literally everything you see me work on over here, and then I do some stuff independently as well, obviously. Because I just enjoy doing it. But yeah, it is there for y'all to be able to use when I'm not streaming. Even if I am streaming, you can use it. Right? You can use it at your own disposal. Any company you're interested in, see if there's notes on there for it. whether it's publicly traded already or if there's a SPAC merger, see what kind of deals and terms you're getting on the deal um, with SPACs that have not completed yet. Total assets. Okay, back to this. We're going to add 6 zeros at the end. 2020, 2019. Cool. Wait. What's going on with gold and silver's price? Just last year in end of March, it took a dive. Whoa, that's not expected. It's up, it's back up. Doesn't look like much is going on with it. People like gold for a storage of value, right? Yeah, totally agree with that. People love gold and silver as a storage of their wealth, where they can invest in it and it's going to hold its value. You know, if we go into a recession and they're gonna, whatever. If we go into a recession, it's going to hold its value. They're going to maintain their wealth. Their wealth should grow as well when inflation kicks in. Um, More of your dollars, more of your papers costs. It's going to take more of your papers to buy 1 ounce of gold, 1 gram of gold, 1 kilo of gold. Same for silver. The reason that you might not see price movement happening or price might be going down is people might have more confidence in the market. You know, it's hard to get exactly what's driving the pricing or how exactly people are thinking, but that's my thought process is I think people are starting to get more confidence in the market again, and you might see a slight recession of the price of gold and silver because people are pulling their money back out of these storage, the wealth stores, and they're putting it back into the stock market. That could be it. I don't really, like I said, I invest. I don't trade for a reason. I'm a shit trader. Um, every time I think I understand how consumers are going to behave and they're going to react, I always somehow get it wrong. Um, So yeah, in investing, this is a Peter Lynch thing. If you're investing rather than trading, I think you do both, right? Because you scalp. When you're investing in companies, if you spend 13 minutes in a year analyzing and trying to understand the economy, you've wasted 10 minutes. So that's my thought process there is like when you're looking, like if you're steering a ship, right? We're trying to go to the moon. Let's picture like we're steering a boat, or maybe we're just driving in general, because not all of us drive boats. I certainly don't. You're just driving in general. When you're looking directly in front of you, like maybe 5 feet in front of your car, you're going to be going left and right and left and right and left and right, trying to analyze what's going on between the lines. Or if you're mowing the lawn too, that's a great analogy when I was learning to drive. It's like when you're mowing the lawn and you're looking right in front of you to make sure that you mow everything. You end up, you kind of get like a zigzag line of where you're trying to get. But when you look into the distance of where you're heading, same goes for one lawn, same for driving, wherever you're heading. When you look in the distance, you end up driving pretty straight the entire way there. You don't need to be making all these adjustments the entire way. So when you're investing and you start to look in the short term, like a week out or today or a month, like this month, what's happening this month, you end up making a lot of adjustments that you don't necessarily need to make when you're investing. You need to be looking further out. So, I know you trade, so that analogy might not help you there, but yeah, for investing, if you find any companies that you love and you want to stay in for a long time, look at it that way. Don't spend so much time analyzing the economy and how people are thinking. and what's driving prices up or down on any given day, because you're gonna, psych yourself out that way. But I do believe that the value of gold, silver, uranium, any of those precious metals, I think they're going to get driven up in the next 5, 10 years, if history proves correct. All right, I'm looking for. So what of these are current? Let's see if we can get that. Yeah, I think we do too. If the market proves, if history proves correct in the market, right, you're gonna watch a huge correction happen. You might go through a crash, and no one wants to be stuck holding the bag when everything comes crumbling down. But you're gonna leave a lot of money on the table. I've done it already in my pretty relatively young life. I've made that mistake. All the big investors that talk about it have made that mistake, where you try to time the market because you don't want to sit through the correction that you know is coming, and you got this gut feel. I pulled out a plug at $8. I bought in the plug at $4. Had a pretty decent uh, amount of shares in plug at $4, and I sold out at $8 because I convinced myself that there is a massive crash heading our way. I forget what reason I gave myself to psych myself out there. I sold all my shares and I was waiting for the crash, and the crash never came. Plug went from $8 to $10 to $20 all the way up to $70, and because I tried to time the market, I missed out on all that money. And that's not I'm not alone there. There are people like these very well-respected investors who have lost a lot of money trying to time the market. It's for every one time you're right, you're going to be wrong 10 times. That's the saying. My dad's the same way. In his 40 plus years of investing, he's a financial advisor. When he tries to time the market, you're right maybe once out of every 10 times, and it's not enough. Like, you would have been better just leaving your money alone in the market. It would have recovered like everyone thought. Doomsday is coming last year as the recession kicks in. And, well, as COVID hits, and who's this? Yeah, as COVID hits and the recession starts to kick in, or the recession, I say loosely, and he said that one of his clients, they were freaking out, they psyched themselves out, they pulled their money out literally the day before the market and the S&P 500 hit its bottom, and it quickly recovered. It took a year, not even a full year, for us to hit or reach pre-COVID levels and then shoot right past them, right? And so every market correction or every crash is not going to be like the recession we saw back in 2008 or the recession we saw back in 1987. It might not last 4 years. It might last 1 year, and your money would be better left. Just leave it alone. Don't yank it out, because if you yank it out too early, you're going to watch share price maybe skyrocket like I did with plug. I pulled out at 8 when I was in at 4. I got a 100% return. But if I would have waited until it hit 70 to pull out, what kind of return am I looking at there? I'm looking at a 10 bagger for sure. So that would be my only caution to you. Is it's easy to psych yourself out here. It's easy to think the correction and the crash is coming tomorrow, or next week, or next month, and very rarely is anyone right in thinking that. No one can predict it. That would be my only caution there. All right, let's look at this. I think we should probably just use cash and cash equivalents, investments and fixed maturity. Then this will be our current. Will be this line plus this, and this. Okay, so we're gonna have to hand type this, but we're gonna have to manually calculate this, but we'll see what it adds up to. Oh, what is this? Wait. Oh, it's this bottom line. Never mind. So 873, 79, 1, 2, 3, 4, 6 million, billion. 2020 we had 817, 729 billion. And then how about our liabilities? Okay, liabilities, we're looking down here, 422 billion. And then previous years ends we were at 389. 166, 1, 2, 3, 4, 6. We gotta go add our current assets up. Nice. Thanks, Warren. This will do. Alright, so what do we want? We want 44714 plus 03000 plus 20410 plus 281 170 123 170 plus 17303 plus 19201 plus other receivables 32310, and then inventories, property, plant. That's usually where you see long-term assets kick in. On the railroad, utilities, and energy, 3276 plus 3542 equals. All right, current assets, we're looking at $512,226,000,000. All right, now we need to go to our current liabilities. Those typically end it's accounts payable typically is where you'll see it end. Okay, so we're going to end right here. Last one. Alright, so we got 79854 plus 40966 plus 21395 plus 21616 plus 8670 plus 29279 plus, alright, let's go down here, 15224. That's going to be equal to that. Alright, 217 billion, 4 million. So they got very healthy liquidity. Then we got to go down to shareholder equity, common stock. Total shareholder equity. Lesser the non-controlling interest. So we don't need non-controlling interests in there. 2020. 443 billion, 164 million. Then it was 424 billion, 791 million. Going in favor of the good guys. Number of outstanding shares we'll find below. Year ended. Total revenues. That's what we want. Annual report. And they did. This is what a well-oiled machine looks like, folks. Best company and one of the best companies in the world for a long, long time. You don't get to that top of the hill in the castle and hold your spot there for as long as they have without running like a well-oiled machine. Revenue was down this year by $9 billion. Net income right here. This is what we want. Oh no, we don't need earnings. Separate. Net income, we're looking at, profit margin took a dive. 43253, 123, 6, 81792, 123, 6. So yeah, profit margin went from 32% in 2019 to 17.6% in 2020. So that is something I guess noteworthy there. Alright, how many shares do we have floating around? Well, we can find that out pretty easily. Divided by 604, 100, 6, divide that by 396, 234. They got this many shares floating around. Warren and Charlie do this for a reason. They only want great people to be holding their shares. Alright, let's bring it over here. Get this really quick. Alright. Berkshire Hathaway Class A common stock in review. So looking at, this is the price when it started, $396,234 per share, up a little bit from the close yesterday, about $300. It has since gone up even more. This gave us a market cap of $604 billion, and we've got a book value per share based on all the numbers we crunched of $290,674.82, and that gives us a 1.36 price to book ratio. So for value investing, they don't necessarily fit into the 100% certainty being undervalued, but there's really no growth priced in here right now, right? Anything under 3 tells us that there's probably a good opportunity here by my standards. If I could afford a full share of Berkshire Hathaway Class A, I would buy it right now. I can't afford that. Maybe someday. If I work hard enough, I can buy one share of that, and I'll go to their shareholder meetings, because, man, those meetings got to be lit. Total assets have improved by $56 billion. Total liabilities have gone up by $33 billion. Our debt to asset ratio is very healthy. It's below 0.5, which means that they're financing mainly off of shareholder equity. That is the remainder of their assets once liabilities are taken out, which makes it a more conservative investment. They don't have debt. hard for a company to go bankrupt when they have no debt. So your money should be safe there through a correction, through a market crash. Our current ratio is 2.36. So we have a very healthy number or amount of liquidity. We've literally got $300 billion to play around with if we have an opportunity we want to jump on, which not many I don't know many companies who can say that and have that luxury. Our total stockholder equity improved by $18 billion in 2020 from the end of 2019. Our revenue was down by $9 billion this year. 2020 was not a usual year for everybody. You can buy partial shares of Berk A class, Berk A on Robinhood. I've bought it for like a week. My money did grow. I put like $100 in there back in the day. And I think I made like $14 in a week. So if I would have owned a full share and I would have made 14%, I would have been a much happier camper. But you just you can buy the partial shares like for shits and giggles, but it's not gonna do too much for you for your account. Their profit margin, you can see that was what I was surprised about. Decreased from 32% in 2019 to 17.6% in 2020. Notes real quick. This is 20. Let's see what numbers we're working with here. Total assets, we're up by, what did I say, 56 mil. $56 billion. Liabilities up by $33 billion. Make our notes. This will probably be our last one for the day, folks. I am going to depart after this, have some lunch, and I got a meeting coming up in 30 minutes. Total assets increased by about $56 billion. Total liabilities increased by $33 billion. Thus, total stockholder equity increased by $18 billion. Well done, Warren and Charles. Revenue decreased by $9 billion in 2020. Profit margin 20. Profit margin decreased from 32.12% to 17.62%. So, alright. Save this. I'll have this uploaded later today, folks. If you want to get in touch with me, you know you can find me in the Discord. All you got to do is private message me if you have any questions for me ever. Private message me or tag me and stuff. I respond to all my private messages typically within 24 hours of getting them. I get a lot of notifications though, so that's usually the best way to get in touch with me. Or if you tag me in certain channels, I will try to respond as soon as I see the stuff. Or if you want, you can get in touch with me in any of my socials below. I do have my weekly clubhouse tonight. We are going to be talking over the origins and the evolution of language from the time we were cavemen to today. We're talking about, hearing people describe people as valid or sturdy, as the kids are saying it these days. So yeah, we're gonna be talking about that tonight, starting at 8:30 p.m. Central Standard Time. It's gonna be a great conversation, great discussion. You will not want to miss that. That's on Clubhouse. If you need an invite there, hit me up on Discord or hit me up on any of my socials below, and I will, get you an invite. It is an invite-only platform, but I do it for free. Great discussions, great conversations, great vibes, great people. You guys will definitely enjoy it. Other than that, if you haven't already, please, please, please smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we drop a new video, every time we go live. We're making money up in here, which is every single day the stock market's open, folks. With that, I appreciate y'all being here. I will be back tomorrow, probably in the afternoon. I've got meetings in the morning, so I will try to get on in the afternoon. But other than that, y'all have a great rest of your day. Go make some money. Go hunt the blood in the water if you're bleeding right now. Go find some opportunities out there. This market is rich and ripe with opportunities. That being said, y'all take care, and I will see you